All right, welcome back for the episode of Carnivore Trades. Today is Wednesday, October 19th, 2022. Not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, so markets here slightly lower on the day, down just under 1% here on the spiders, which really is not a small move, but for today's environment, it is a rather pedestrian move. Big story on the day, obviously Tesla earnings, we'll cover that. I will take you guys into the close and we'll cover that live. So it's about 10 of 4 right now. And we'll take a look at that after the bell. Also Netflix, obviously you see in the corner of my screen here. That managed to hold up into the, or has held up into the close today. It is fading a little bit off the highs here as we did go up and tag that 200-day moving average. But Netflix actually holding on to the gains. Pretty impressive move there. For Netflix, actually had kind of a nice bull base here going on, and Bill Ackman actually kind of looks the worst right now, as this is now above that previous gap down. Remember, he sold out towards the end of April, and yeah, Netflix up to 270 now. So Netflix actually a nice little pop there. Obviously, the big story though will be Tesla after the bell, so that's trading up 0.5% currently. Again, I'm watching this pattern here on the weekly. Where it closes the week is very important to me, so I want to see a close if I'm bullish above this trend line, because that will negate that head and shoulder pattern. Anything below that, and this is fair game and in play, and it's got a lot of downside to go. I think it goes lower either way, but the negation of that pattern would give you a pretty good short-term upside bias there on Tesla. So we'll watch that one later. Other big story on the day, 10-year yield here, TNX, hitting highs not seen since 2007. So I think I can flip over to TradingView, and I should be able to show you that. I don't know if my Thinkorswim chart goes back far enough, but here's the 2-year there, and that you can see is still above 4.5%. By the way, the 3-month is banging on the door of 4% as well. That actually got up to 4.07 earlier in the day today before fading off the highs. But 10-year here, 4.13% new highs. Let's look at the monthly. So that is going to take us, yeah, all the way back to 2008 there. So, and then even on the 2-year we mentioned a minute ago, that is up to now 2007 levels. So that has surpassed the 2008 level, and that's now to 2007. So yields, big deal right now for the market. Today, not so much. It is definitely a whipsaw Wednesday if there ever was one. And you know what that means if you're not familiar. It's the Opex. The Wednesday before Opex is typically full of really volatile, choppy action. So we kind of gapped down this morning. We had a big sell-off in the morning and then immediately ramped right up. And then those highs really just got faded immediately. We came down here, had an inside bar, a little 10-minute inside bar, a bear flag. That failed. We went up to the upside. So lots of fake outs, head fakes. You'll get lots of rumors. Remember yesterday that iPhone news that came out. Obviously that wasn't a rumor, but still you get like these weird news releases. And that's typical of this of Opex weekend, especially Wednesday. So lots of chop shop going on here, and really looks like it's just kind of digesting for a move. I still think there's a good chance Tesla earnings will definitely, be a factor in this. I still think there's a good chance we get up to that 380, 378 area there on the spiders for the triple Qs. He's still contesting with this trend line. So we're not above that. We're, still right now that is held, but I still think there's a good chance you get up to that gap fill, maybe up to these pivots as well here, especially if Tesla's earnings are favorable. But for right now, market is still under a little bit of pressure. We take a look at the ES here, and I talked about this yesterday. So that rising wedge did break. So we do have, a setup for the downside here, and you can see it's basically the same thing as 2 weeks ago. So here's your kind of little support pivot. You went up with the rising wedge, tagged on the downside, tagged on the upside, broke through it, and then you hit it here, had one little fake out, and then we sold off pretty sharply again into the CPI number before that big move down to 3,500. And then you see the same thing here this week, or really rather the last week or so. So down, up, tagged it, didn't quite make a higher high, but then came down, and we tested this little support pivot. So this support pivot here is, essentially functioning as the same as this previous one. And now we're basically back testing that, and we're just getting a little bit of a bid back above that. So we'll see what we get here. So I wouldn't rule out this scenario either. So market is in, market's definitely vulnerable here. We are in the earnings season, so there can be lots of volatility. We are hovering right at 3,700 here on the futures, and the same thing on the SPX, so 3692 there. It is Opex week. It wouldn't shock me one bit if we closed the week right at 3,700 as well. Just big whole round number. Lots of premiums sold and bought at that whole round number. That's just the way humans like to do things. And the algos will push things in that direction usually. But again, if we get big news, again, earnings can throw a wrench into things. Who knows what Putin's going to say. So we're in that kind of environment where we can see a lot of volatility. But I still would not rule out a risk up or move up into this risk zone here. So again, you see it right here clearly on the SPX, like 3850, and then you have the 3900 area there. I don't think we quite get up there, but 3800 to 3850, I think is a pretty good area of risk for the market. But I wouldn't rule out a move up into that zone here in the near term, especially with Opex week and a lot of puts being bought in the system. We also are coming close to the election as well. So there is incentive for the markets to, or at least the powers that be, to keep the markets up. But there's also incentive for, other countries, the East, Russia, China, to kind of forcibly push our markets down into the election to make us look bad. China just today, came out with more rhetoric on Taiwan. So there's the types of things we got to be on our toes with. And I told you guys a week or two ago, I think the next shoe to drop will be geopolitical. That's just kind of my hunch right now. That's, I just go off the charts here. So it's anybody's guess. That's just kind of my hunch right now. I don't think that a CPI number or anything like that is really going to be the next kind of catalyst. I think we need, that type of stuff has been, I have to feel like it's kind of priced in. Otherwise you wouldn't have had that good reaction that we had off of the initial gap down. I think the next shoe to drop will be a little bit more out of left field, a little bit more of a black swanish type event. And of the geopolitical nature. But anyways, that's just my 2 cents here. So as far as our sectors here, so semiconductors, again, having a decent day. So up in a down market, and that is a little positive sign. You can see here, had a nice surge in the morning. When everything else surged, the semis actually put in kind of a higher high here. So you take a look at the highs from yesterday afternoon, not the highs of yesterday, but the highs of yesterday afternoon. We eclipsed that on this SMH, whereas the spiders did not do that. So we got almost up to the highs yesterday, this morning, but we couldn't stay above it. So the semis actually showed a little bit of strength there. So that does suggest that maybe we have a little bit more upside. Again, semis are still a leading indicator here, and you do have technically a bullish inside bar, but it's below all the all 4 major moving averages. So it's not a pattern of strength. That doesn't mean you can't get a bid in the short term. It just does not mean that this is in a very strong technical position here. But short term, I like to see the semis green when the market's red. It does suggest that there's possible upside. IGV, on the other hand, was red, so down 1.18% currently. There's 2 minutes left in the trading day. And we went up to that 260 handle, got rejected here. Again, lower just like a lot of other things. Let's not make too much out of it here. It's basically trading in parity with the rest of the market. Dow Transport's a little bit of a reversal. You could make a case that you had kind of a, almost kind of an evening star. So you have this, up move, and then a gap up and a doji, and then a sell-off. So that could be construed as an evening star candle. Also, the Russell, similar kind of look here today. So that, down and then up move. Wouldn't really call this a doji, but, it was a gap up, and, you sold off intraday. And then, a flush lower today, although we are getting a little bit of a bid here in the final half hour. So, again, just pointing that out, be on watch for an evening star. And we also noted yesterday, too, we got to watch the transports. The transport starts selling off and the market's holding up. That's going to be a major red flag here, because that did happen a month ago. And the Dow transports were holding up over the last couple of weeks while the markets were soft. Remember, so this was your CPI day here on the transports. And that never made new lows, whereas the SPY definitely did. And back here, the SPY hadn't made new lows into the 3rd week of September, whereas the transports were making new lows. So transports have been leading the market, and we definitely need to keep an eye on them moving forward. But for what it's worth today, down 1.7%, and possible evening star reversal there on the daily. We talked again about interest rates. 10-year up big, gapping up 3.23% gain there. 30-year up 2.6, so big move there. Fives up again, new 52-week highs there, 3.2%. So interest rates still surging higher. Take a look at the 2-year here. New 52-week lows, new multi-year lows for the 2-year treasury, and again, not suggesting a bottom here in the market anytime soon. And another thing too, take a look at, not to get too sidetracked here, but notice how the last couple of days here, really, there's a closing bell here. So we'll check in on Tesla in a second. But notice how, from the 16th to the 17th, gap up, didn't really go anywhere. Gapped up yesterday, we sold off. A lot of the movement here on the bull side has been overnight, where there's very low liquidity. So again, not suggested. There's no follow through during the cash session, and that is a bit of a red flag here moving forward. And just add it to the pile of red flags to this little bounce here that just suggested this is a bear market rally. But anyway, so we talked about rates here. 2-year getting smoked again, down 23 basis points. Huge move for the 2-year. Again, pedestrian in this market, but not a good sign in general that bonds are this volatile. Anyways, XHB down 4.7, so it's still holding that 54 handle. If you hammer on this enough, this will break, and I don't think that low pivot will really save you. Again, you can make a case here on the weekly. You do have some weekly bear chop here, kind of inside this range, so I don't like that look there for the XHB. Again, same thing with the ITB, same kind of deal. Today down a little bit over 5%, so 5.22. So home builders in a little bit of trouble here. VNQ getting rejected at that 20 moving average. Bulls need to put in a higher low here and get above that 20. If you can do that, then you can have a move back up to 82, 83. But VNQ, again, showing a little bit of weakness. And again, going to get rid of the 618 here so it's easier to see. But again, possible little evening star. So up move, gap up into the 20, into resistance, and then a fade off of that. So be careful with real estate here. It's, again, the only bull case here is that it's so oversold that it's almost bullish, but right now it's in a very awful technical position, and home builders are starting to look pretty weak as well. All right, financials here. So we're through most of the bank earnings. Again, same kind of look, gap up yesterday and then a gap down and a flush today, so down 1.64%. So you're not able to confirm back above that 32.23 pivot. And again, you essentially tested the 50 and 100 moving average yesterday, and so we're backing off of that. You want to see it hold. The bulls want to see a higher low above that 20 moving average. And then, possibly you could get up to that 34 handle. But for right now, it did get rejected there. So we'll definitely keep an eye on that moving forward. XBD broker dealer is actually kind of an inside day here. So that's holding up all right. Down 1%, but really inside of yesterday's candle, all things considered. So no real problems there for XHB for the time being. Moving on to crude. So crude, a modest day here. Up 3%. So, basically paired all of yesterday's losses. So, again, you never really confirm the break below that yellow trend line. Levels are still the same. Still looking for that blue trend line on the downside. Upside would be, a break of this trend line again. So this downsloping white trend line here. And confirmation above that would give you a pretty good bull bias. I'm not really sure either way. There's lots to talk about the SPRs. They're basically going to drain them to zero before the election. That's their desperate play right now. So, we could see a little bit more downside in oil. I mean, that's certainly a possibility, especially if they're hell bent on doing that. Again, the problem is that's long-term bullish. So, yeah, they say they're going to buy it back at 62. Okay, yeah. So, either way, crude under a little bit of pressure this week, getting a bounce today. But again, we could see a little bit more pressure before the election. If we get some type of a sell off before then, I think you buy that dip. I mean, into the midterm. I mean, that makes a lot of sense to me. But anyways, we'll watch the levels here. Let's get over to XLE. XLE confirming above the trend line. So XLE on breakout here. Yeah, you got to give it the upside bias to 88 and change. So there's that gap fill up there, 88.71. I'll put it right in now for us so we can follow that. So right in that area. So that is where we're looking for XLE to go. I like that trend line breakout, confirmation above it. Nice move here. Again, the only thing I don't like is that, if we get some type of a major panic in the market, which I do think is going to happen, it's going to take everything down. So XLE is strong. I would buy the dip if that happens, but right now that's the only thing really keeping me out of it. XOP as well. So again, confirming above that trend line, nice breakout there. So that has legs up to probably about 155 there. So right into that pivot high there, about 153.63. So right into that zone. Let's just put it in there as well. There you go. So right there, 153.63. on XOP. So nice move there. And again, still got a nice bullish pattern here on the daily, and it's consolidating sideways. I like to see that. OIH as well. So getting above this trend line. This needs to confirm it tomorrow. It is Opex, so we could see a reversal here. There's no confirmation right now, but a nice pop here, up 4.64%, getting back above that gap fill. So OIH showing some strength here, and energy looks pretty good right now. Nat gas here down 5% on the day. This is into my buy zone now. You have 1, 2, 3 bars down into a sell zone. This is your, you had an inside bar bear flag here starting to build up on nat gas. So big sell-off bar, 1, 2, 3 inside. And then we had a huge reversal that ended up failing. That's where the money is sitting. So that's where the institutions are sitting. That's where they place their bets. Retail can't make a candle like that. Retail can't make a candle reverse that kind of a pattern. That's where the institutions are sitting. You see these prior pivots here. That's where it is. I like nat gas down here. Could it get down a little bit farther to $5? It's possible. Anything's possible. So. But this is really where you want to take your shots on this thing. So I do like nat gas here. But yeah, did complete that kind of 3-bar sell, 1, 2, 3 on the daily, and left a gap here last week as well. Actually, yeah, Friday to Monday left a gap there. So that remains to be filled as well. So any case, I do like nat gas down here, down 5% on the day. We'll see what it does tomorrow here. Dollar index up 68 basis points again. So still can't even get really much below that 20-day moving average with any conviction. Dollar index still holding up well, basically sideways. And this is still, still a bullish chart. There's no problems with it other than the fact that you're, pretty much straight up overbought as you can be on the larger time frames. So on the monthly, it's gone straight up. That's the only problem you have with it. But for right now, it's still holding up well, and it's behaving well and can go higher. Gold under a lot of pressure today. So not just the dollar being up, but really, the 2-year getting crushed, TLT getting crushed, TLT new 52-week lows. So that is hurting gold, and I think we're getting close. I think we're getting close to the washout that I'm waiting for here. We still haven't taken out 52-week lows yet. I don't know if we do it this week. It's possible. Again, we talked about this earlier. They always seem to hit gold during Opex week. That I don't know what it is. It's just the way it works, I guess. It just noticed the red lines here, the vertical red lines, like every time during Opex week almost. You get these right beforehand, right before, right in the middle of, right beforehand, always into Opex week. So maybe it gets a bounce into double bottom or through double bottom next week after Opex is over. We put in a lower high and we get the washout. That's possible. Either way, gold down here today. Miners still holding up well though. GDX down 3%, but still has potential higher lows here, whereas gold is much, much closer to double bottom. So miners still showing a little bit of strength here, relatively speaking. Silver a little bit on the softer side as well, but again, I've told you guys this, I like silver better than gold right here. And again, still showing potential higher lows here. That doesn't necessarily mean they won't break, but when you compare it to gold doesn't have that. So silver still showing relative strength here. And I do like it better than gold right now. Platinum backing off of that trend line, and I like this better than all of them currently. Let's take a look here. We may actually have a wedge starting to form on platinum. Yes, we definitely have a wedge there. So we'll be on look for that. Possibly even tomorrow if that continues lower. So that'll be a pattern there to watch on platinum. But I still like this regardless. Better than the rest of them. And then palladium here, still just kind of hanging in here sideways. No major moves so far with that one. And then copper also backing off. So again, we got to watch this lower trend line here. Didn't mean to do that. There we go. So we got to watch this lower trend line here. If this does start to roll over and break double bottom, that's probably where it's going to want to go. And at this point, that is through double bottom. And I do have a good level for buying copper. It is lower than this. But again, if you put in a higher low, there's nothing to say you can't, go back up and retest the September highs. But for right now, it is in a little bit of a weaker technical position. So we'll definitely need to keep an eye on that. All right. And lastly, Bitcoin here. You guys know what I'm going to say. Nothing's really changed. There's the monthly. You can see that really nice bear base there on the monthly. Same thing here with the weekly and the daily, basically just an inside day. So really, again, a nothing burger on Bitcoin so far. So anyways, let's get back over to the markets. Let's take a look at Tesla. So it's down to 14. So a little bit of a dump here on Tesla. Let's flip over here. We'll take a look at the All right, so yeah, Tesla getting hit here. Nothing terrible, though. I will say this is nothing terrible just yet. It's only 4:09 p.m. right now, so it's hard to say. So that was 214. So that's really just it's really just right on that trend line. So Tesla hanging in there. Again, we'll have to see what this looks like by the end of the week. But for now, a little bit of a negative reaction. Let's take a look at ASML. I believe they report too. I'm not sure if it doesn't look like they're out just yet. But they do report as well. So that is a pretty big company as well that can move the market, though not nearly as much as Tesla. So definitely interested to see. So kind of a bit of a nothing burger really for Tesla. I mean, it's trading down, but it's not like a major sell-off or a major, pump. Let's take a look at the futures. Yeah, so back above 3,700. Yeah, so getting a little bit of a bid. Yeah, nothing really too crazy going on. So futures really kind of shrugging up the Tesla news, which is good. For the bulls, this is actually a good thing. So Tesla missing or market not liking, I don't know I have no idea what the numbers are. I'm doing this live. But Tesla missing on earnings and having the NASDAQ futures flat, that's a really good sign for the bulls. So we'll keep an eye on that moving forward. But yeah, Tesla's earnings out. We'll be watching that. Watch that end of week pattern there on that weekly trend line. But again, I still think there's a little bit of a good shot of some more upside here in this market for the ES up to that, maybe 3,800, 3,825 area there on the daily. Then I think we're coming into a good period of risk here. So we'll keep an eye on that moving forward. Anyways, guys, I'm going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you guys all tomorrow.